It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Yeah, so for Melbourne, house prices have jumped 2.3% in the June quarter to 1,063,000. So that's the highest median in 3 years and the sharpest quarterly lift in 3.5 years. So we're really seeing that price momentum has picked up a lot.
And that is Joel Bowman from Domain. We'll catch up with him in just a moment with some pretty interesting numbers. Hey, welcome back to the Real Estate Breakfast as we break you down the Australian real estate market. We are here 7 days a week. There is always something to talk about, isn't there? And it is so nice to get Monday out of the way. Few more days, 4 to be exact, and we'll start to look towards another weekend. It is a Tuesday, running out the clock on July. It is the 29th, and Sydney has hit new price records for both houses and units. Now, this is driven by increased borrowing capacity from rate cuts and ongoing supply shortages. According to the latest Domain house price report, the city's median house prices climbed to 1.722 and change. That is rising 4.2% or 68,000 over the year to June. And looking at the unit prices, once again, they have surged up 3.2% to a median of 834,000 and change, an annual rise of 25,000. Experts are saying that escalating house prices are pushing more buyers towards units, and the gap between the two is now at a record 106%, with houses costing more than double the price of units. So let's go and catch up with Joel Bowman from Domain. And good morning to you, Joel. Welcome into the Real Estate Breakfast. First off, as I mentioned, recent rate reductions have boosted borrowing power and really has supercharged in Sydney the price growth.
Hi, Craig. Thank you for having me. Yes, it has. So the RBA has cut interest rates by 50 basis points this year, and it looks like there's more to come as well. The Sydney housing market, it has historically been the most sensitive to interest rate changes, and I think this time is kind of no exception. And with the price momentum really picking up during the first half of this year, drilling into the segments, I think it's really interesting to see that the houses at the top end of the market have been quite sensitive to those interest rate changes as well. So we've seen price momentum pick up at the top end of town, but we've also seen those affordability pressures kind of play out, and it's increasing a lot of competition for properties at the more affordable end. And so we've seen prices in some of those cheaper pockets also increase quite materially this year as well.
Yeah, so if you have a look at southwest Sydney, that does lead the house price growth. 10% it is up to 1.21 mil, while Parramatta follows at 8.8%. And surprising, the outer southwest also saw the highest unit price growth at 6.7%. So there seems to be pretty good appetite in those spots.
Yeah, absolutely. So I think people are potentially trading off some of those premium kind of locations and looking further afield to see what they can get for their given budget. And that's a kind of increasing competition in some of those cheaper pockets, which is pushing up prices there. I think we're also seeing kind of more buyers take advantage of some of the first home buyer schemes as well, which is increasing their kind of capacity to pay to some extent. The schemes such as the Help to Buy, and they're also benefiting a lot from those lower interest rates as well.
So traditional high-end regions like Northern Beaches and North Sydney still performing pretty well. But as I mentioned, the real action is shifting westward. What is happening on the Northern Beaches? What did the study from you guys throw up?
With those lower interest rates, historically, it's the more expensive pockets are the ones that are the first to move in response to those lower interest rates. And I think the Northern Beaches is kind of a classic example of that lifestyle kind of appeal of those particular pockets. People kind of being drawn into that. They've got extra borrowing capacity due to those kind of lower interest rates. But I think what makes this cycle quite different is that since the beginning of the rate cuts, affordability has been kind of quite stretched for a lot of households. And so you've got this dichotomy going on. So you've still got the traditional mechanics at play where the top end of town is really benefiting from those lower interest rates, but then those affordability drivers are also supporting prices in those cheaper pockets.
Yeah, it's all about affordability. Now, part of these numbers, you also did a piece on a first home buyer, Annie, in Sydney, 29. She's one of many first home buyers that are having to recalibrate their expectations. If you are listening to us this morning, you're in Sydney and a first time buyer, you're probably saying, yes, I can relate to exactly that. Annie originally was hoping for a unit in Ashfield. She's now hunting in Croydon Park or Earlwood and is ready to give up the luxuries like a balcony or internal laundry. And her buyer's agent says that these sacrifices are becoming more common as every square metre of lifestyle adds tens of thousands of dollars to the price, and never a truer words have been spoken, Joel.
No, absolutely. And I can certainly kind of empathize with that. So, it's not a surprise to many to know that a lot of people's budgets, they don't buy as much compared to what they used to, particularly in the Sydney market. And we're also kind of seeing that kind of play out with the data as well. So if we're thinking about price performance as well across the size houses or by number of bedrooms, what we've seen is that in Sydney over the last year, it's really these smaller houses. So the 2-bedroom houses, they've increased the most over the past year compared to 4-5 bedroom kind of homes. So it's a clear sign that buyers are trading off potentially that extra bedroom in order to be able to secure some land in Sydney.
We are talking to Joel Bowman this morning from Domain. If you are in Melbourne or Brisbane wondering what the latest numbers and the movement is like, when we come back, we will ask Joel to give that a breakdown for us. We'll do that next.
Listen to expert perspectives with exclusive real estate conversations and supercharge your knowledge base with us.
Well, right now, let's catch up again with Sharon Lish. She is in Moreton Bay in Queensland. The first thing I want to mention to you is just going back to that little note talking about buying your second property and what that does in somebody's mind psychologically.
I think it's an enormous boost to their esteem, to their ability, their capabilities. The first one is hard to get, and once you get it, it's great. But when you get that next one or subsequent ones, it does say that you've got a strategy that's working and that you've planned for. And yeah, it's a great thing, great feeling.
Have you struck that before where somebody is bought from you and there is that self-doubt where they're saying, oh, Sharon, I'm not too sure if I'm doing the right thing here?
I think the first one scares people. Mortgages are massive things to get your head around, and just acquiring that first property, it's uncharted territory, new territory. And once you've had it for a while and you get that next one, it sort of slips into place and it feels like, it backs you up. It gives you that self-esteem.
Yeah, it's true, because you buy that second one and suddenly it can feel in many ways for investors that are just starting out off to the races. Suddenly the third one just around the corner.
Yeah, it compounds. I think like interest in the third home or second home, third home is like you're compounding interest on an investment. So it's leverage and it just, that leverage feels good across the board, internally, financially. Gives you a strategy that says, hey, maybe I'm doing the right thing. I know what I'm doing now.
Leverage, if you break it all down, is a superpower. At the end of the day, without leverage, you don't have much.
Absolutely. But, the leverage that you get from having your first home that you can then borrow against, but also that leverage in the learning that you're getting and the skills you're developing as a property investor. You get wiser and smarter, and it's a strategy that you continue to do.
I also mentioned buyers agents, the Real Estate Buyers Agent Association raising this alarm over the surge in untrained, inexperienced agents entering the field.
Yeah, look, the majority of them out there are well trained and very, very capable. It seems to be a trend a little bit with agents who don't necessarily like dealing with the listing and guiding side of sales, that think it's easier to get into being an advocate for buyers, and they just think it's as easy as looking on realestate.com and finding a house and saying, hey, this will suit you, and that's it. So sometimes they lead buyers astray in that way because they're not actually searching for what the buyer wants, and they're just, winging it, I guess. And that's where it becomes a bit of an issue with the trained buyers agents. They're very skilled. They know exactly what the client wants. They know the market. They know it as well as any sales agent. And those transactions usually go really, really well.
We are more than just a real estate podcast. We cover a multitude of subjects, including property data, current buyer-seller sentiment, and the mood of the market. Follow each week all of the main talking points and know your property.
And it is a Real Estate Tuesday. Hope you've got a busy day planned. Right, let's go and find out from Joel what the numbers are doing in Melbourne and Brisbane. First, Joel, let's go to Melbourne and some of the numbers that you can reveal for us.
Yeah, so for Melbourne, house prices have jumped 2.3% in the June quarter to 1,063,000. So that's the highest median in 3 years and the sharpest quarterly lift in 3.5 years. So we've really seen that price momentum has picked up a lot. House prices are now only 2.7% below the December 2021 peak. If we're looking at unit prices, they rose 2.7% in the June quarter to 573,000. So that's the highest median in a year and the strongest quarterly lift in 2 years.
Okay, let's go to Brisbane now. What are the numbers telling us there?
So for Brisbane, house prices, they rose 2.1% to a record high of 1,060,000. So that's the 10th quarterly gain, marking the city's longest run of continuous growth in 21 years. So quite an achievement there. The quarterly growth has picked up compared to the March quarter, but it is still slower compared to the rates that we saw last year. Unit prices, they've risen for the 17th successive quarter. So that's the longest run of uninterrupted gains on record. So it's jumping 3.6% this quarter to 678,000. So Brisbane remains Australia's second most expensive capital city for units, behind only Sydney on that front.
Yeah, the units in Brisbane, out of control, no question about that. Another market that people are finding it very, very difficult to get into. All right, we'll wrap it up there. Great to get those numbers and the breakdown from you this morning, Joel. You enjoy your Tuesday, and thank you so much for coming on to the Real Estate Breakfast this morning.
Oh, thank you so much for having me. Appreciate it.
Unlock the secrets of real estate and stay informed about the latest real estate buzz with hot market trends, emerging suburbs, and hidden gems.
It's always important when, especially in times where there's lack of supply, to just extend your radius just that little bit for obviously more supply options, and two, just for those more affordable options.
I was going to ask you, what are a couple of things, as I mentioned, you're the president of the Real Estate Institute there in WA, like two things that you're constantly being asked about, and they probably are the supply and the lack of new builds, unless there's something else that you're constantly being asked about.
Yeah, obviously lack of supply, and it's a catch-22. We need the immigration, we need the trades to build the housing stock that we so desperately need. It's interesting, I've got a subdivision in Huntingdale, which is a southern suburb of Perth, that has been in planning for 2 years. It's been incredible for me because I've seen the price of a block go from $250 to $450, but that's crucial housing stock.
We connect you to the best real estate information across Australia. The Real Estate Podcast.